If you receive CPP or OAS, or plan to in 2026, stop for a moment. A new federal policy update tied to March 2026 is changing how much some seniors could receive, and not everyone will benefit equally. This is a national pension alert for Canadian seniors. A March 2026 federal policy update is changing how CPP and OAS payments are calculated and delivered. Some retirees could see higher deposits. Others may notice little difference. The outcome depends on your benefit status, and many seniors will not realize what's happening until their payment arrives. If you miss this update, you could misunderstand what's coming to your payments. This affects CPP recipients, OAS seniors, retirees age 60 and over, and near retirees planning to apply this year. The timing matters because March 2026 is when these changes take effect, and understanding them now could mean the difference between maximizing your retirement income or quietly losing money you're entitled to receive. Here's what many seniors don't realize. The March 2026 federal update involves the annual indexation adjustment to both Canada Pension Plan and Old Age Security benefits. According to Service Canada and official updates posted on canada.ca, these programs undergo regular cost of living adjustments based on the Consumer Price Index. The March 2026 adjustment reflects inflation rates from the previous year, meaning your monthly payment amounts will shift to account for rising costs. This is not a one-time bonus. This is a permanent adjustment to your benefit level going forward. Pay close attention to this part because the increase applies automatically to current recipients, but the amount you see depends entirely on your individual benefit category, your age, and how long you've been receiving payments. CPP payments are recalculated quarterly, with the January increase reflecting updated indexation. OAS payments are adjusted quarterly as well, but the March payment is when many seniors first notice the change in their deposit amounts. If you're already receiving benefits, you do not need to reapply. The adjustment happens automatically. However, if you're planning to start benefits in early 2026, the timing of your application could determine whether you receive the indexed amount from day one or wait until the next quarter. And here's the part many retirees overlook. Not all seniors will see the same percentage increase. CPP benefits are based on your lifetime contributions and the age you started receiving them. If you took CPP early at age 60, your base amount is lower, and the indexation increase applies to that reduced amount. If you delayed CPP until age 70, your base is higher, and the same percentage increase results in a larger dollar amount added to your monthly payment. OAS works differently. OAS is based on residency, not contributions. If you've lived in Canada for 40 years or more after age 18, you receive the full OAS amount. Partial OAS is calculated based on fewer years of residency. The March 2026 indexation will apply to your individual OAS rate, meaning someone with full OAS sees a larger dollar increase than someone with partial OAS, even though the percentage is the same. This is where payment calculations can quietly differ between seniors, and most retirees don't realize the math until they check their deposit. Let's walk through 5 specific scenarios so you can see exactly how this federal update affects real Canadian seniors. Scenario 1. You're a new CPP retiree starting benefits in February 2026. You apply, get approved, and your first payment arrives in March. Because the indexation takes effect in March, your payment reflects the updated rate immediately. You benefit from the increase right away. But if you had waited until April to apply, you'd still receive the same indexed rate, but your first payment would be delayed by a month. Timing your application around indexation periods doesn't give you extra money, but it does affect cash flow. If you're planning to retire in early 2026, apply before the end of February so your first payment lands in March with the updated amount already built in. Scenario 2. You're 65 years old and already receiving OAS. You've been getting payments for several months or even years. In March 2026, your OAS payment automatically increases based on the Consumer Price Index adjustment announced by the federal government. You don't need to do anything. The new amount appears in your bank account on your regular payment date. However, here's what many seniors overlook. If your income is high enough to trigger the OAS clawback, also known as the OAS recovery tax, the increase might be partially or fully offset by the clawback calculation. The clawback threshold for 2026 will be updated as well, but if your net income exceeds that limit, you'll repay 15 cents of every dollar of OAS over the threshold. So while your gross OAS payment increases in March, your net payment after clawback might not increase as much. This affects higher income seniors, and many don't realize the clawback applies quarterly based on prior year income reported to the Canada Revenue Association. Most retirees overlook this step. Scenario 3. You're a low-income senior receiving the Guaranteed Income Supplement, or GIS, on top of your OAS. GIS is designed to top up income for seniors with little or no other income. The March 2026 update will increase your OAS base amount, and because GIS is calculated based on your total income including OAS, your GIS amount may adjust as well. Here's the critical detail. GIS is recalculated every July based on your previous year's tax return. If your OAS increases in March but your GIS hasn't been recalculated yet, you might see a small bump in total income. However, come July, your GIS could decrease slightly because your OAS income is now higher. The total combined amount usually increases, but the shift between OAS and GIS can confuse seniors who don't understand how the two programs interact. If you receive GIS, file your tax return on time every year, even if you have little or no income to report. Failing to file can result in your GIS being suspended, and that costs you far more than any indexation increase could provide. And here's what many seniors don't realize about Scenario 4. You're part of a retired couple, and both you and your spouse receive CPP and OAS. The March 2026 increase applies to each of you individually based on your own benefit amounts. If one spouse has higher CPP due to longer work history or higher earnings, that spouse will see a larger dollar increase. If one spouse has partial OAS due to fewer years of residency, that spouse will see a smaller increase. For couples managing a household budget, it's important to understand that indexation doesn't equalize payments between spouses. Each person's benefit is calculated independently. Also, if you're receiving the allowance or allowance for the survivor, which are benefits for lower income seniors aged 60 to 64, those payments are also indexed. Couples often overlook these smaller programs, but they follow the same indexation schedule as OAS. Scenario 5. You're 59 years old and planning to retire in late 2026. You're not receiving CPP or OAS yet, but you're watching these updates closely because you want to maximize your retirement income. Here's the part that matters. The March 2026 indexation applies to current recipients, but when you eventually apply for CPP and OAS, your starting benefit amount will be based on the rates in effect at the time you begin receiving payments. If you start CPP in December 2026, your payment reflects the indexed rates from earlier in the year. If you delay CPP until 2027, your payment reflects any further indexation that occurs in 2027. The key takeaway is this. Delaying CPP increases your benefit by 0.7% for every month you wait past age 65 up to age 70. That increase compounds with indexation over time. So if you delay CPP and let it grow, every future indexation increase applies to a higher base amount, which means more money in your pocket for the rest of your life. Near retirees often underestimate the long-term impact of delaying CPP, especially when combined with annual indexation adjustments. This next detail is where payments can change. Let's talk about the financial consequences of this March 2026 update. Based on inflation trends and government projections, the indexation increase for 2026 is expected to be in the range of 2 to 3%. That might not sound like much, but let's do the math. If you're receiving the maximum CPP retirement benefit, which is approximately $1,300 per month, a 3% increase adds roughly $39 per month. Over a full year, that's nearly $470. If you're receiving the maximum OAS benefit, which is around $700 per month, a 3% increase adds about $21 per month, or $250 per year. For seniors receiving both CPP and OAS, the combined annual increase could be over $700. That's not pocket change. That's groceries, medication, utility bills, or savings for emergencies. Pay close attention to this part because inflation indexing is designed to protect your purchasing power. Without indexation, your fixed income would lose value every year as prices rise. The March 2026 update ensures that your CPP and OAS keep pace with the cost of living. However, indexation only maintains your purchasing power. It doesn't increase your standard of living. If inflation was 3% and your benefit increases by 3%, you're staying even, not getting ahead. Seniors who rely solely on CPP and OAS need to understand that indexation is protective, not growth. If you want to improve your financial situation in retirement, you need additional income sources such as RRSP withdrawals, TFSA savings, or part-time work. And here's what many seniors don't realize about tax implications. CPP and OAS are taxable income. When your benefits increase due to indexation, your taxable income increases as well. For most seniors, this doesn't push you into a higher tax bracket, but it does mean you'll pay slightly more income tax. The Canada Revenue Association will adjust your tax withholding if you've requested voluntary deductions from your CPP or OAS payments. If you haven't set up voluntary deductions, you'll owe the tax when you file your return. Additionally, higher income can affect income-tested benefits like GIS or provincial seniors programs. Some provinces offer additional top-ups or subsidies for low-income seniors, and those programs often use your net income to determine eligibility. A small increase in CPP or OAS could push you over a threshold and reduce other benefits. This is why it's important to review your entire income picture, not just your federal pension payments. Most retirees overlook this step, but OAS clawback considerations are critical for higher income seniors. The OAS recovery tax begins when your net income exceeds a certain threshold, which for 2025 was around $86,000 and will be indexed for 2026. If your income is near that threshold, the March indexation increase to your OAS could push you slightly over, triggering clawback. The clawback rate is 15%, meaning for every dollar over the threshold, you repay 15 cents of OAS. If your income is significantly over the threshold, you could lose part or all of your OAS payment. High-income seniors need to work with a financial advisor or accountant to plan RRSP withdrawals, pension splitting, and other income strategies to minimize clawback. The indexation increase doesn't help you if it's clawed back. Why timing of retirement matters. If you're planning to start CPP or OAS in 2026, understanding the indexation schedule helps you make smarter decisions. CPP can be started as early as age 60 or as late as age 70. OAS begins at age 65, though you can defer it for up to 5 years for a higher payment. If you start benefits just before an indexation adjustment, you benefit from the increase immediately. If you start just after, you still get the indexed rate, but you miss the previous quarter's payment. The difference is small, but over a lifetime of payments, every dollar counts. More importantly, starting CPP early means accepting a permanently reduced benefit, and every future indexation applies to that reduced amount. Starting late means a permanently higher benefit, and every future indexation applies to that higher amount. The compounding effect over 20 or 30 years is substantial. Here's your immediate action plan. Do this month, not later. Step 1. Review your current CPP and OAS status. Log into your My Service Canada account online. Check your current benefit amounts, payment dates, and any recent correspondence from Service Canada. If you don't have an online account, create one. It's free, secure, and gives you access to all your benefit information in one place. If you're not yet receiving benefits, use the Service Canada website to check your eligibility and estimated benefit amounts. The CPP Retirement Pension Estimator shows how much you could receive based on your contribution history. Step 2. Check your My Service Canada account for updates related to the March 2026 indexation. Service Canada typically posts notices about indexation adjustments several weeks in advance. You should see updated payment amounts reflected in your account by late February or early March. If your payment amount doesn't change, or if it decreases unexpectedly, contact Service Canada immediately. Errors can happen, and catching them early ensures you don't lose money. Step 3. Confirm your payment dates for March 2026. CPP and OAS are paid on the same schedule, typically on the third to last business day of the month. For March 2026, verify the exact date your payment will be deposited. If you're enrolled in direct deposit, the money should appear automatically. If you're still receiving paper checks, consider switching to direct deposit for faster, more secure payments. Delays in receiving paper checks can cause confusion, especially when payment amounts change due to indexation. Step 4. Speak with Service Canada if something looks wrong. If your payment amount doesn't match what you expected, if your GIS was suspended, if your OAS is being clawed back and you don't understand why, or if you have questions about how indexation affects your specific situation, call Service Canada or visit a Service Canada office. Wait times can be long, so call early in the morning or try the online chat feature. Don't wait until after your March payment arrives to ask questions. By then, it's harder to correct errors retroactively. Let's answer 5 common senior questions quickly. Will everyone get the increase? Yes, all CPP and OAS recipients will see indexation applied to their benefits in March 2026. The percentage increase is the same for everyone, but the dollar amount depends on your individual benefit level. Do I need to apply again? No. If you're already receiving CPP or OAS, the increase is automatic. You don't need to reapply or submit any forms. Are March payments automatic? Yes. The indexed amounts will be deposited on your regular payment date in March 2026. You don't need to take any action unless there's an error. Will GIS also change? GIS is recalculated annually in July based on your previous year's tax return. The March OAS increase may indirectly affect your GIS, but the formal GIS recalculation happens later in the year. Can payment amounts change again later in 2026? Yes. CPP and OAS are indexed quarterly, so further adjustments could occur in later months depending on inflation data. However, the March 2026 increase is the primary annual adjustment. This March 2026 federal update is already shaping upcoming CPP and OAS payments. If you or a loved one depends on these benefits, now is the time to review your status. A small timing mistake can quietly reduce your retirement income. Understanding how indexation works, how your benefits are calculated, and what steps to take ensures you receive every dollar you're entitled to. Don't assume everything will happen automatically without checking. Errors occur, clawbacks apply. GIS can be suspended if you don't file taxes. Seniors who stay informed and proactive protect their financial security. If this information helped you, like this video so more Canadian seniors can see it. Subscribe to Canada Senior Benefit Alert Desk for ongoing updates on CPP, OAS, GIS, and federal policy changes. Comment below with your age or retirement stage so we know what topics to cover next. Share this video with another senior, a parent, a grandparent, or anyone planning retirement in 2026. This is the information that protects your income. This is the Canada Senior Benefit Alert Desk, keeping you informed and financially secure.